Students, this is subject accountancy, chapter 4, analysis of financial statement. Okay, so what is analysis? So analysis is nothing but simplification of financial data. Okay, so then financial statement in the sense we know that we are preparing various statements such as balance sheet, profit and loss statement, income statement, etc. Okay, so now in this lesson we are going to see how we are going to analysis this type of financial statement. What are the tools we are going to apply? Okay, yes. First one, definition of financial analysis. According to Finney and Miller, financial analysis consists in separating facts. Okay, first one, separating facts and then definite plan, arranging them in group and easy read and understandable form. Okay, so we can see one by one, as we know very well that so balance sheet consists of 2 or 3 pages of information. Okay, so it is difficult to say collect the information for the finance manager. Then what he has to do, he has to separate the information according to the heading wise. He has to prepare a finance report. Example, sundry debtors. So under sundry debtors, he has to write the information regarding the list of debtors. Okay, how much amount they have to pay. Okay, and then what are the provision for sundry debtors, and and he has to write the amount of bad and doubtful debts. Okay, he has to prepare a complete report on sundry debtors. Okay, that is called separating fact. If he needs the amount of fixed asset, he has to collect all the fixed asset information, and he has to write everything or write or type. Okay, so from starting to end, he has to write all the asset which are under the name of company. Okay, so definite plan in the sense planning for future. If we are planning for future asset, so for what purpose we are preparing a financial report on asset. So if we have more fixed asset, it will strengthen for our company. Okay, so for that only we are preparing financial report, and then arranging them in group. So each and every data we have to analyze, not only sundry debtors, not only fixed asset. So sundry creditors we have to frame a report, and then about income tax, everything. Okay, so it is the duty of a financial manager. He has to analyze the various financial statement, and he has to frame a report on it. Okay, so presenting them in a convenient and easy to read and understandable. Okay, so who has to understand this financial report? So we people know the financial statement, we easily we can understand. Okay, so that is not a matter for us, but we have to give this information, financial information, to our shareholders. Do you understand? We are preparing this financial report to give information to our shareholders, and then to our top management, to our lenders, to our trade payables, labor unions. Okay, for them only we are going to prepare this financial report. Okay, meaning of financial analysis. So financial statement analysis is a systematic process. Okay, so year by year the finance manager has to prepare this financial report. He has to analyze this financial statement. Okay, systematic process of studying the relationship among various financial factors contained in the financial statement to have a better understanding. of the working and financial position of a business is. So in short, financial statement analysis is a judgmental process, okay, which aims to estimate the current and past financial position of a company. Okay, so the primary objective of preparing this financial statement is to know the weakness, the strength, and the credit worthiness of the company. Okay, yes. Objectives or purpose of financial statement analysis. First one, to measure profitability or earning capacity. Yes, each and every enterprises has the main aim of rendering profit. Okay, only our non-profit organization, okay, their main aim is to rendering service. Okay, other than that, other institution has the main aim of earning profit. Okay, so the first one, the financial statement analysis, the main aim is to measure whether the company incurs profit or loss. Okay, to measure the financial strength of the company. Yes, so already I told that finance is a lifeblood of an organization. So each and every activity in an institution is greatly depends on finance. So finance is the strength of organization. So to reveal the strength of organization, financial analysis is more important. Preparing financial report is more important. Third one, to make comparative study. Yes, so comparative in the sense, intercomparative study and intra-comparative study, both types of there. Okay, so comparative in the sense, we have to compare our present balance sheet with our past balance sheet. Okay, so in order to find whether the company incurs profit. Okay, so to find the credit worthiness of the company. Do you understand? And then this is inter comparative study. And then intra comparative study means we have to compare our balance sheet with our competitors company's balance sheet. Okay, so in order to reveal whether our company is in progress position or not. Okay, so that is very important. Comparative in business is very important in this competitive world. So each company, okay, so each organization, they have so much of competitors in the market. Daily new companies are arriving. So it is difficult to compete our company in our market. Okay, for this purpose we have to compare our company's progress with other company's progress. Okay, for the betterment of our company activities. Next one, to judge the efficiency of management. It is very difficult for the top level management to handle all the problems inside the organization or outside the organization. The company should take an efficient and effective way to solve the problems arising inside and outside of our business. Okay, so the efficiency of the business in the sense, problem solving, earning high profit, and having good market condition. These 3 points reveals the efficiency of a good management. Okay, and then limitation. If there is a advantage, definitely there will be a disadvantage. Okay, so here the main limitations are, it ignores price level. Okay, so the change in price we won't show. And then lack of qualitative analysis, fail to provide final picture. Consider only monetary aspect, non-monetary aspect we can't take into account, already we know this. Okay, so non-reliable conclusion, so the conclusion may not be more reliable. Okay, more true. Okay, so sometimes the finance manager unknowingly he left some information, so it won't be non-reliable conclusions. Lack of qualitative analysis, it won't consider the focus of some group. Okay, so it consider all the information and totally it should be presented on the financial report. And then various tools of financial statement analysis, we know that comparative statement, common size statement, trend analysis, ratio analysis, fund flow statement, cash flow statement, except fifth one we know all those statement. Okay, fund flow statement and all you will study in your college level, degrees level. Okay, so comparative statement, common size statement, trend analysis, ratio analysis, cash flow statement. Okay, we did all the sums related to this tools of financial statement is. Shall we see one by one? First one, comparative statement. So comparative statement is a document. Compare a particular financial statement with period statement. So comparative in the sense we have to compare the present year balance sheet with past year balance sheet. Okay, these are the statements showing profitability and financial position of a firm for different period. Even we can compare our statement with previous month statement with current month statement. Okay, so different period of time in a comparative form to give a idea about what, idea about the financial position of the company. So the main aim is to relieve the information related to finance. Okay, so the two important financial statement we know very well. What are they? Balance sheet and profit and loss statement. Okay, so the financial data will be comparative only when same accounting principles are used. So they have to use the same accounting principle. Okay, the comparative figures indicates the trend and direction of financial position and operating result. So this is also known as horizontal analysis. Comparative analysis is also known as horizontal analysis, and vertical analysis, that is common size statement. A common size statement is otherwise called as vertical analysis. Is common size statement. Common size financial statement helps to analyze and compare a company's performance over several periods with varying sales figure. Okay, so the common size statement compares the sales figure. So these are the statement which indicates the relationship of different items of financial statement with a common item. Okay, so each item will express in percentage. So you, for your better understanding, so refer our sum. Okay, so we did everything in percentage. The percentage thus calculated can be easily comparable with the result of previous year performance. Okay, yes, such a statement also known an analyst to compare the operating and financial activities. So operating and financial activities is more important in an industry. Okay, so operating activities in the sense the company should have sufficient finance to meet out the day to day activities of an organization, day to day activity expenses of an organization. Yes, then we know very well about trend analysis. So trend analysis is a technique. So latest technique which we are applying that for analyzing financial statement. So it is a technique of studying the operational result and financial position over a series of years. Example, from 2005 to 2015 we can analysis all the financial position. Okay, we can easily analysis all the sales, we can easily analysis all the purchase throughout past 10 years. Okay, trend analysis is very easy. Okay, technique that tries to determine future movement of given variable by analyzing historical trend. Okay, in other words, it is a method that aims to predict future behavior by examining past one. Okay, trend analysis helps to relieve the information for our future. Okay, so using the previous year data of a business enterprise, trend analysis can be done to observe changes over time in selected data. The selected data may be a purchase, maybe sales. Okay, maybe some other thing related to operating. Okay, yes. Ratio analysis, we have studied various ratio analysis, that is profitability ratio and then solvency ratio, lot and lot. Okay, so ratio analysis, it is a significant relationship which exists between two various items in the balance sheet. You know very well, we have to prepare the ratio which the amount and information should be extracted from the balance sheet. Okay, so it is a technique of financial analysis. So accounting ratio measures the comparative significance of the individual item. Okay, of income and income of a company. That is a current asset ratio, current liability ratio. Okay, and then a solvency ratio, profitability ratio, lot of ratios there. Okay, so in order to find the relationship. Yes, next one, cash flow analysis is. So cash flow analysis is movement of cash. So within an organization, the movement of cash may be inflow of cash and outflow of cash. Okay, the difference between inflow and outflow of cash is the net cash flow. Okay, so always the company has to concentrate that inflow of cash should be more than that of outflow of cash. Okay, so importance of comparative statement. So comparative statement is very easy. Okay, so it is easy for presentation during board of directors meeting, general meeting. Okay, so it is easy for the finance manager to present this comparative statement. Help in drawing conclusion is, even a shareholder who check this comparative statement, he can easily draw a conclusion, so whether the company incurs profit or loss. Helps in forecasting in the sense, so the shareholders, they can forecast whether they can invest their hard working money in shares of the company. Helps in forecasting. If the company earns continuous profit. Okay, so in the sense, the shareholders is ready, they will ready to invest their hard working money in company shares. So what they will predict, they will predict that, so in future the share value will be increased, then it will be a profit to the shareholders. Okay, so help in detection of problem. So the comparative statement helps why there is a vast difference in sales. Okay, so the previous year it may be 1000 tons, so current year this may be 990 tons. Okay, 10,000 10 tons is less, so it is easy to compare. So why there is a loss? Why there is a difference between the two years? Okay, so it is helps in detection of problem. So the problem may be transportation problem, or some such a lockdown problem, like that. Okay, importance of trend analysis. Yes, trend analysis helps in forecasting the future. Okay, in future how much will be the purchase of raw material, how much will be the sales. Okay, so and then percentage terms, so it reveals the answer in percentage. Is already we did sums related to trend analysis, that is 2010 to 11, then trend percentage we have to find out, and then 11 to 12, then trend. So we know the formula, right? Trend percentage equal to present year value divided by base year value into 100. Okay, don't forget. So user friendly is nothing but anyone can prepare trend analysis. So not only that financier manager, so even the shareholder, okay, the board of directors, they can also prepare trend analysis, because this is the easiest technique for analyzing the financial statement. And then present a border picture is nothing but the trend percentage. The trend analysis can be focused to all one. Okay, because it is easy to understand, it is easy to predict everything. Okay, so trend analysis, the 4 points are very important. That's all, children. Thank you. Remaining part we can see later. Bye.